Ladies and gentlemen, good morning, and welcome to another live trading webinar. Today is Friday, 25th of August, the last trading day of the week, and let's see what the markets reveal. But first, as usual, let's read the risk disclaimer. Simply states that this content is for general information only and is not intended to provide trading or investment advice or any kind of personal recommendation. And of course, any kind of trading with CFDs products involves risk. And for the new traders that they join us today, guys, we do have fundamental analysis, and that's the reason I don't show the calendar usually on these live trading webinars, because every Monday I record the podcast, upload it on the website, and you can download it or listen directly from there. So if you find difficult to spot where it is on the website, let me know and I will share it with you. And of course, download the mobile application. It's one of the best tools, in my opinion, especially for investing. When we're trading, I just like to check the orders if I do swing trade it. So, but again, you can browse through your account and all this stuff. And before we go deep into the market, let's see our friends who join us today. Maria said good morning and have a successful trading. Good morning, Maria. William said good morning, Theo. Good morning, William. Larry, good morning. Please ask everyone where they are. Larry has a request to ask everyone where are they, maybe where are they from. Okay, guys, so that will be interesting. Let's do that today. I will start first. I'm from Cyprus, so and I'm based in Cyprus. So where are you watching us from? Ruben said good morning. Theo. Roland said good morning all. Lucky, I like your name, Lucky, said good morning traders. Ruben from Madrid, awesome. Diego, it's been a while to see you here. I hope you're doing well, my friend. How are you, Diego? Roland said watching from Tanis. Okay, William, what you evaluate gold, please. Just let us go through something else except of trading today, Williams. I'm joking, because I'm joking. We will check the gold, of course. Marcelino said good morning from Netherlands. That's fantastic. Mr. Carlos, how are you doing, my friend? Maria Julia said good morning all. Messi said morning all. Back to the gym again. Let's get this spread. Absolutely. I hope you are not on the treadmill yet. Graceland said good morning all. Good morning, Graceland. Joanna said good morning. Good morning, Joanna. Mr. Nick said hello, everyone. Fakohum said good morning all. Rumen said good morning, guys. Margaret said good morning, everyone. And Theo, thank you so much. Maria Julia said I will be at the beach soon. Fagohum said from Nigeria. Awesome. Graceland from South Africa. Margaret, Caribbean. Wow, I wasn't expecting to read that. Raquel, as usual, from London. Joanna said from Lithuania. Wow, lovely place. I've visited many times. Marcelino said from Netherlands. Lucky from Kenya. You're checking if I'm good in geography now, Lucky. Yeah. You post me the flag. But looks like very tiny on this chart. And I hope I didn't get it wrong. Anyway, Marigia said from Bulgaria, Sofia. Fantastic. Radolf said good morning from Netherlands. Awesome. Ponso from South Africa. Krasimir from Bulgarski. Awesome. And Okay, guys. So, and of course, for everybody else that they are behind the screen and watching us, good morning to everyone, of course. So, guys, let's start with the pound against the US dollar. And what did the market show yesterday during the New York session? A massive sell-off on all the currencies against the US dollar that put the US dollar on the first place. So, but for us as traders, we are not sensitive to any currency performance. We don't care because we speculate on the price. Yeah. So price is breaking below this upward neckline. It's breaking below this horizontal support, didn't hold. Can give us lucrative opportunities. First target, if I was about to give technical analysis for any press or any media, my first target I will have give them will be this one here on the daily chart low. And the second target, it will be this one here. And final target will be the last swing. Now, why I do this? Because some traders, they will trade 4-hour chart, some others 1-hour chart, some others lower time frame. Now, here it's a good, I was watching actually this in the morning and it came to my mind. There's a very, very good lesson for you today, guys. We identified now a structure in the market after few months, it took or 3 weeks for sure for the price after this bearish engulfing to identify some new structure in the pound, and it came today. So if today's price will end up closing below this support, means high chances for the market to move and tap into this area of support next week. So what is intraday trading based on this market analysis, and what is not intraday trading? Let's start with what is not. Please learn this today. Intraday trading is not entering on the daily chart based on the daily chart analysis, entering on the 5-minute chart or 15-minute chart with a 5, 10, 20 pip stop loss and waiting for the price to hit a daily target. That's not intraday trading. That's a swing trading. We use time frame correlation. We find a structure on the daily chart, and we use the 4-hour chart or even sometimes the hourly chart if the trend is clear. We enter on a strong price action or a pattern reversal, and we wait. We manage the trade with trailing stop loss and all this stuff to go and take good profit when and if the price reached a level of support in a downtrend. Same and vice versa in an uptrend. All right. But intraday trading is we identified a market structure or we identified market direction. We have some confirmation that there is a high chance of the market to move towards this direction. In this particular case, downward, if we're going to see a valid breakout. Yeah. So, and having this level of support here, it gives a good room of opportunity to not sell and hold until the level reaches. Again, that's a swing trading. To find the way to trade the 5-minute chart or the 15-minute chart, 1-minute chart, and only take sales or mainly 90% of this trading to be on a short side. That's what intraday trading is. Guys, please pay attention to this. I couldn't say it clearer. I think it's very important to understand. All right, next one, Euro US dollar. Again, very prominent market. Next level of support will be this one here. I go on the weekly chart and I find where price post and reverse recently. There are one, two, three levels here. But if someone trades on the daily chart, a major weekly chart level will be relevant. So this lower point here, it is what I will have given as a technical analyst to anyone who asks me, where do you find the next support in the market and why? I just explained you. Now, if you are trading on the 5-minute chart, 15-minute chart, all daily levels are relevant. All of them. Guys, nobody will tell you this stuff, and I'm not saying it to give a pat to myself of what I'm saying. I just went through trading experience, and I'm trading actively every single day. And all this, it's the accumulation of 12 years of trading experience. All right, trading the 5-minute chart, because we use very tight, or the 15-minute chart, we use very tight stop losses. Therefore, any kind of fluctuation can take us out of the trade. That's why all daily levels are relevant for the 5-minute, 15-minute trading and 30-minute. Doesn't matter the time frame. If you are in and out with 5, 10 pips stop loss, and you are targeting to make 20 pips profit 2-1, all these levels are crucial. Okay, I hope today you separate and you have clarity of what you look for when you try to intraday, what you look for when you try to swing, and what is the right mindset and approach towards this. All right, that's what you need. So bearish bias in both pound and the euro, Australian dollar against the US dollar. Look at this. Let's zoom in a little bit. So we said we must anticipate. I'm sure some of you are laughing behind the chat because this week, and I promise you from next week, it's going to be the same. I will insist until you establish that word in your vocabulary. Trading equals anticipation. Okay, so don't be scared about the bullish candle penetrate support. I told you we need the 2-day rule. And I mean, I won't give excuse to any one of you guys here, especially to those that are on this webinar since the first day. And I know each one your name when I read on the screen. And I thank you so much. But I don't, I'm not willing to give excuse to anyone not applying the rules we set up for trading. The rules is to help you become skillful trader and successful and profitable trader. So if I apply these rules and I teach you and I mention them every single day, why not you as well applying the rules? We need 2 consecutive candles penetrate any level of support or resistance to confirm the valid breakout. Otherwise, it is a maybe false breakout. In this case here, we commented yesterday that we're gonna be patient and we'll be looking for longs once the yesterday candle will close above the support. Then and only then we will try to target this level here, the next resistance. But because we are in a downtrend, remember, this is a downtrend, and we said watch yesterday's webinar to remember what we explained about the trend reversal. Okay, so downtrend is still intact, bearish engulfing almost by a few pips. So I will give a credit to this price action as a strong bearish engulfing. Excuse me. So today, high chances are to see price move towards the downside. And I will explain you another secret in, again, that applies in Forex trading and in cryptocurrency trading mainly because of the volatility these two markets they have. Look at this. Previous day candles low, it's this one here. The 2 days previous candle low, it's this one here. Then it's this one, then it's this one, then it's this one. We are more used to in stock trading to see fully loaded candles, and the distance between the one candle's open from the next candle's open, or in an uptrend, the lows between each candles, and in a downtrend, the highs between each candles, they have some good distance. In high volatile markets, especially like currencies, like cryptocurrencies, we see these small distances quite often, but that doesn't take away the fact that we must stick to our support, especially for intraday. Everything here will be considered as support when you go to the 5-minute chart. And I will show you why. Do you see on the 5-minute chart that the distance between one support to the other, it's 17 points? You can establish a trade here. But if you don't care about that and you don't pay attention to all these supports, there is a high chance on the 5-minute chart, if you decide to sell somewhere here with a stop loss somewhere there, and you don't pay attention to the daily support because you say, oh, okay, it's just one candle and it's minimal, chances are the market maybe it's going to tap into this support, bounce upward, take the stop loss because it wants to correct the move, to retrace the move, and then continue downwards. And then you are living, what's going on? Why this happened? Because markets are dynamic. They have high volatility. Maybe this will happen right at the London Open. Who knows? All right, guys. I mean, please pay attention to this stuff. So, but for a swing trader, the relevant support, it's the highest time frame support. It's the weekly chart support. Here is the price is here, then the price has a support there. So that's for the swing trader. Okay, now I do expect to see more weakness simply because there is a downtrend, very bearish candle, closes well below the open of the previous candle, and we expected the price to continue traded downwards. Now, 4 hour, 1 hour can be used to find some strong price action setups, 15 minutes maybe to find some consolidation and then break out to the downside because we trade towards a higher time frame direction, or to find some lower highs, lower lows, and try to capitalize on that move, or to apply Bollinger Band strategies that I explained you numerous times. Next one, New Zealand against the US dollar. Yesterday, again, remember we commented about this area of resistance here, price stopped, reversed, continue moving downwards. There is a strong support found on the 4-hour chart that it's going to affect the intraday trading, maybe a bounce upwards before price continue downwards. I will mark it on the daily chart. Guys, do you understand this? Is it clear? USD JPY price tapped at this support. We had a lower low yesterday, but what did I tell you yesterday? Please go back to the yesterday's webinar and listen. Regardless, I said price tapped at the support and it got false breakout. It doesn't mean this lower low establish a new downtrend. There is an obstacle here, the support, and at support prices usually bounce upward. So please understand this, learn this, and it bounces upward with a bullish engulfing. There is a high chance for this consolidation here to be like the bull flag, the pennant pattern. Do you guys see it? It's a continuation pattern. Looking for bullishness there. USD Canadian dollar, we said that we were looking for this false breakout. We commented that it's at this resistance here, but the market has another resistance there. I didn't take this trade because the resistance, as you see, it's up there. So it looks like maybe the market will move upwards. USD CHF expectancy was to see, of course, this market to break to the downside. No price action. We commented on this again yesterday, guys. We said price came up here, but with no conviction from sellers that they want to dominate the market. So price now, if we have 2 days continue close to the upside, looks like we have a new level of resistance that found up this point there. Euro JPY, inside candle yesterday. Now, inside candles are powerful candles when they traded with the trend. If you see an inside candle in an existing trend, it's a very high probability signal. If this, it's going to be, we have 2 closes below this this line here. Now, it can act as resistance. But if we see a break below this candle, high chances is the market to tap into this area of support. Now, what can a lower time trader do? Maybe this hourly, if it's going to end up as a bearish engulfing, it can give a good reward to risk ratio to be traded towards this hourly support level. Understand, when you trade lower time frames, you have to zoom out and see where your strong supports are in that time frame as well. I told you that so many times. Yeah. Pound JPY, pound looks quite weak, right? So we do expect to see some more weakness here. Australian dollar, price congested at this point here, no bias. CAD JPY, no bias here. It was some good trading setups to take them from this resistance, but it could be used as an intraday trader, a bit scalping, nothing as a position trading. Guys, position or swing trading, it has to be when the market has a defined structure. When the market is just stuck between support and resistance, how can we swing? How can we take any pullbacks and go with a predominant trend? There is no trend. We do swing trading when the market is trending. New Zealand against the Japanese yen, nothing here, just very messy. EuroCAD and so on, we don't tend to look at these currency pairs. But if someone is trading these pairs, kindly let me know and I will go through. We have 5 minutes for the London Open. And William said, Theo, what are you explaining is very useful, and you are right. However, just nowhere they explain it like you just did. Ruben, does the two-candle rule apply to other time frame? Usually a strong conviction for a breakout. Good question. We need the daily closes to confirm that all these traders, they trade in Tokyo session, in the Asian session, London session, and New York session. They have that agreement and the conviction that they're going to move the price towards that direction. So an intraday fluctuation, unless it's going to be used for scalping or intraday, then they wouldn't be considered as valid in general. Evgeny said, good morning, Theo. Best thing is to watch the Google Finance market. Absolutely agree with you, if that's how you used to trade. Mogil said, good morning, Mr. Theo and everyone. Perhaps he said, good morning, Theo. It looks like I'm late to class again today. That's okay. Henry, how are you doing? Theo, is pound USD on daily, not head and shoulder? Absolutely. It looks like a head and shoulder. Spot on. Yao said, good morning. So yes. All righty. So very quickly to check the gold. It's still in this uptrend now. It's still in this upward move. Price touch at this resistance that we commented before. This one here, a strong inside, very strong inside resistance, and we may see some retracement. But traders who bought here with a stop loss below there, that let's say 100 pips, it's 2.5 to 1, almost. It went almost 3 to 1. So you have to know how you trade, what type of reward to risk do you guys use. DAX, very strong. Very strong bearish engulfing yesterday on the DAX and on the indices, actually. So we do expect to see some dynamic move in the market. I will go for a sell stop below this low here. And I will go for a buy stop above this high here. So some rally early around 9 o'clock, yes. With the, I think that's which stock exchange opens. I think it's the German stock exchange opens at 9, at least my time zone. So we see some volatility coming to the market. Overall, buyers are favoring the short side of this trade. So we will see if this trade will end up being on the short side. So far, I have 2 orders. The one is buy stop above the high, above this high point on the chart, and the other one is sell stop below this low I show on the chart. Marcelinus, you are very welcome. Guys, remember, for Zoom participants, please make sure today and the next week give as many feedback as you can. Please, I need to know what I can plan for next quarter's webinars. That's why I need to collect a lot of feedback. So If you like the webinars, if you don't like them, what improvements you want to see, any suggestions from your side. If you want to know, if you want me to know who left the comment, you must include your name because all of them are anonymous. Guys on YouTube, you can type your comments on the chat, or you can send me emails, no problem at all. People from Zoom can also send me emails. You all have my email address. I think so. So, market opens, and so far, nothing. Marco and Maya, you guys raised your hands, but in this webinar, I'm the only one who speaks. Don't get me wrong. I'm joking. Guys, please type on the chat. If you are new on the Zoom, if you, sorry, I'm saying that I don't know, just please use the chat to type anything you need to ask me, okay? Henry said, you promised to teach us. I promised to teach you how to use the EMAs. Yes, I did. So, moving averages until, by the way, we are currently watching the DAX right at the London Open. We'll see where the breakout will occur. It's a breakout will occur, yeah. So until we're going to have a breakout, we have another 5 minutes, and I will tell you about moving averages. Simple. We plot moving averages to see where the trend, and if there is a trend. We usually plot two moving averages, a slow, it means a lower number on the implication, and a fast, like 9 or 21 or 10 and 40 or 20 and 50, some kind of combination. And the numbers are not random. The numbers, we take them from the cycles. There is another chapter in trading and investing about cycles. There are what we call presidential cycles. There are many cycles, okay? Not elephant cycles. Just up to presidential cycles in the USA, not in Cyprus, of course. So, and we want to use them mainly as fielders. Okay, fielders. I rarely initiate trades because price will bounce off any moving average. I use them as filters. And what I want to filter, if there is a trend, if the one moving average, the slow is like this one, if the slow is below the fast, then there is a high chance that the market is going to keep moving downwards because it shows a downtrend. The most important thing to take away from the moving averages is this. Moving averages are lagging indicator. Lagging with A. Lagging indicators. It's not so they follow the price, because moving averages, they calculated after the price closes. So first we see the price, and then the moving averages, they show the direction. That's why we call them lagging indicators. Like some oscillators, they show divergences and bullish or bearish. We call them leading indicators because they show if this swing, this recent move, is strong enough compared to the previous move. This case here, this high and this high, this high and this high. I'm so confused even with my drawings. I can imagine how confused you can be. Yeah. So this high and this high, then the relevant on the indicator, it's this high, and then it's this high. So if price and oscillators are in agreement and they confirm each other, there is a high chance after a correction occur to see continuation. That's what divergences or normal behavior of this means. If after the correction, we have a high chances to see continuation, and we do have, after this correction, high chances for the prices to continue upwards. Why? Because it shows that this move was stronger than this move. So we expect the next move to be also stronger. Now, price approaches this high here, and let's see if we want to get filled in this trade. If we will, that will be a good one. That's the hourly time frame. If we get filled in this one, we can see the price move all the way here, about 17 points. Back to the 5-minute chart. Yes, we got filled. Let's hope that it's going to be a valid breakout and not a false breakout. Again, that's always the battle between breakout trades, regardless if it's in a line with a higher time frame or not. A breakout, it's a breakout, and always has that hidden information. Maybe it's going to be a false breakout, not a valid. So we will see what's going to happen here. Any questions, guys? 15,564, 15,5. We could, yeah, we could, but okay, yeah, we could do that. Yes, Ruben, that's correct. Henry, is it okay with the moving averages? Maria Julia said, Theo, your sessions are like small treasures. You don't know what you can find every time. It's exciting. Thank you. Oh, that's a good feedback. Appreciate it. Looks like price rejected. Guys, let me tell you something now about the resistance. For example, if that was a daily resistance, okay, and we trade the way we trade, if the market is going to come and fall down, let's say our stop loss is here, if the market, it will come and tap into this area and take our stop loss and then continue upwards, you have to understand it's because we scalp and we have tiny stop losses in the market when we do scalping. Okay, that's why we said we have to understand that every single daily high and low, it's a crucial for intraday trading. Very important, very, very important. Poncho, my stop loss, it's right here now. One minute left for this candle completion. Evgeny, appreciate your comment. In 10 years, you can become successful trader. In 5 years, you can become a developer. Absolutely. It's also about how you what do you like to do. It's not only the time, it's also to enjoy every single and to enjoy the subject or the business you are involved, the activity. So for me, I love my job. I love what I do here. So I wouldn't exchange it with something else, at least at this time. Thank you. Roland, yeah, one more time. Every daily level matters as a strong support or resistance for an intraday trading activity. So for this trade, I added a stop loss here, a hard stop loss, because it's been a while that the market is moving. Usually in the first 3-4 minutes, we were in and out of a trade, but now maybe this ranging, it's not going to favor our trading activity. So because of this structure here, and because we do scalping, if after 3 minutes the price action closes like this, I will move the stop loss right here below this current candle low, because the market, if it ends like here, it will be considered as a ranging market. Okay, and because I have to end this webinar now, one more time, if this candle stays within this price range in the next 2 minutes, chances are this is going to develop as a ranging market. Therefore, I will move my stop loss below this candle low, because we are scalping and there is no reason to give so much room to the price to fluctuate. Scalping means we get in and we try to get the fast move, the momentum for some short period of time. Okay, guys, thank you so much for being on this webinar. I want to believe that you gain a lot of value again. I want to wish to everyone to have a fantastic weekend, get some rest, think what we said a little bit about trading, establish some rules for next week. And I look forward to see you all again on Monday at the same time with more activity, a lot of trading, and of course, not financial education. Yeah. Okay, guys, see you all. Bye-bye.